So I want to leave the listed equities with just this quick overview of some of the largest assets that we have, and turn my attention to the private equity portfolio. And of course, the private equity portfolio is quite diverse. We have a number of very exciting assets in our portfolio on private equity, and currently these companies are operating in 6 different sectors: aviation and travel, retail, beverage, leisure, energy, and property. As I mentioned at the outset, the revaluation of the portfolio indicated an uplift of about 3 billion, which I believe is conservative, and it's comprised of revaluation of the assets that are listed on the page: Gacy Green, Refresco, House of Fraser, and a negative impact from Unity. Just very briefly on Gacy Green Energy. Obviously a company that has been in the news quite significantly lately following its announced intention to merge with a company called Ray, owned by Reykjavik Energy. This is a firm that we co-founded at the beginning of 2007. And essentially what we have been doing since then is expanding the operations of the group to include a company called Iceland Drilling, which is the leading geothermal drilling company, HS, a utility on the southwest corner of Iceland, where we currently own about 32%. And then, while we have been engaged in the merger discussion with Ray, we've also managed to secure a majority of a company called NX. And what this basically means is that Gacy Green, as a standalone entity, regardless of what will eventually happen with the merger with Ray, is now, I would say, the leading exporter of geothermal know-how out of Iceland. We have control or significant influence on all the major projects that have been initiated by individuals from this country in this particular field. So there's no company that is better positioned to take advantage of what we believe is a very exciting opportunity, and one that we will pursue very aggressively going forward, with or without the partnership of others. So it's a company that has moved forward significantly this year. It's a company that we've been able to actually strengthen during the recent turmoil in here locally. So it is not it's not a make or break for Gacy to merge with Ray. Of course, we plan to move forward with that merger until we find some way of either contractually changing the deal, or we go through other legal avenues. But having said that, I just want to leave you with the thought that Gacy in and of itself is a company that is fully capable and fully intends to move forward in the field, and it currently controls, I would say, the vast majority of the most interesting geothermal projects in the country, which are being undertaken outside of Iceland. Refresco, just a brief touch on that. A company that we invested in the spring of 2006. Again, at the time, the firm was turning over about 600 million euros, currently turning over about 1.2 billion euros with an EBITDA margin of between 9 and 10%. Now, this is one of the companies that we ended up increasing slightly in value. We took a very small increase in valuation on Refresco, and we believe that it has a lot further to go. Certainly, if you applied the same multiples to Refresco as are currently ascribed to Bakkavor here in Iceland, then you would have a significantly more valuable asset than we are showing on our books. And even so, the approach that we used to value the company was extremely conservative. We are continuing with the strategy for Refresco, both organic growth as well as further acquisitions. So we're looking to essentially have the company execute along these 2 paths, both introduce new products, develop new customers, as well as follow our customers as they turn to their geographical expansion. And in addition, we are looking at several acquisitions in this field, and our goal is that when we come back 1 year from now, that the number will not say 1.2 billion in sales, but 2.4. So very much a growth story, and one that we're extremely excited about going forward. Now, there's a number of other assets that fall into the group of the FL group that I'm not going to touch on here today. Of course, we hope to be able to update you on developments with Inspired Gaming, which we're currently in the middle of a public to private transaction on. But a number of other interesting assets that we could talk about at length, which I'm not going to do here today, but I'm certainly more than willing to do on a one-on-one basis with any one of you. I want to turn my attention then briefly to the valuation front and look at a picture that shows you a little bit of the comparative valuation between ourselves and many of the other institutions in the market. What we're showing you here is the core shareholders' equity at the end of the third quarter for some of the largest financial institutions on ISEX, both in the banking and investment field, as well as the price-to-book ratios of these firms on the basis of the numbers that they have published. This again is simply using the book value as reported at the end of the third quarter, without any adjustments there too, as well as the market value of the individual companies at the end of the third quarter. What is interesting to us, and this is where perhaps we get into a bit of a comparison of how you report your results, is that if you look specifically at the three investment firms, Exista, Torca, and FL, and if you look at essentially some adjustments, you see some very interesting results emerge. Exista, of course, is using an equity method to value their assets, but if you look at footnote 19 in their financial statements and adjust the book value of their assets to accurately reflect the market value of the asset, you see a significant increase in the price-to-book level. In a similar fashion, when you adjust the price-to-book value of the FL group for the issuance of equity in relation to the acquisition of TM, you see a slight decline. So I felt that this was an important thing to show you, simply to highlight the fact that you have to understand when you compare and contrast firms, the difference, of course, between the methods that are used to value assets and the fact that the FL group uses mark-to-market, takes all of the changes in value through its P&L, while some other companies, of course, use other methods to present their financial figures, and it's an important consideration when you look at performance in this regard. In closing, just to leave you with a few thoughts, we believe that our portfolio is strong. Of course, it has been challenged in the turbulence, as we've talked about, but the good news is that the performance of the underlying assets is extremely strong. There's not a single bad asset among these different companies. AMR is producing results that are much greater than what they produced last year. Commerzbank is producing results that are higher than the market expects. Glitnit is delivering on all fronts. And the unlisted companies that we are shareholders in are also posting very strong results. So we have an exciting portfolio of companies, and the fundamentals of those businesses remains very strong. We are going to continue our active dialogue and continue to push the management and shareholders at AMR to make a move to increase shareholder value. We, of course, note that the ongoing market volatility means that our performance is highly dependent on the global capital markets. There's no secret to that. But we believe that we are well placed to take advantage of the volatility and to pursue different opportunities across both sectors and geographies going forward. So on that note, I'm going to close the formal presentation part of today and open it up to any questions that you may have. Okay, well, if there are no questions, then please feel free to seek out any one of us. Following the close of the session, we will be around to answer questions you may have, or to follow up with us directly on the phone. On that note, I would like to thank all of you for coming and look forward to seeing you next time. Thank you.